Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. So I am at marketchameleon.com looking at the unusual options volume page to see what sort of interesting things may have happened. Now, it's generally been a slower week because it is a holiday week, but there is generally something interesting happening no matter the day. And as you can see, sorting by volume here, there is still plenty of action in the big names and some of the big ETFs. Apple with a huge day in terms of volume of options. Amazon, another big day. We have some of the sector ETFs doing pretty well. Natural gas and some other random companies, another sector ETF. So a fair amount of action despite the slower day. So let's look at Amazon because there's been some news. Basically, Amazon had its biggest day ever, and just this holiday week, and just these last couple weeks, it's seen a ton of business. Part of that is just more and more people wanting to order online and not having to fight crowds and do all the stuff associated with holiday shopping. But another thing is that it's just a sign that consumer spending is still relatively strong, and that's something that is being seen, domestically, is that consumer, despite some economic data showing a recession, one thing that the two areas that have really been still relatively strong are the labor markets and consumer spending. And as long as those areas are strong, it doesn't seem like the economy is going to drop into a full out recession, and particularly with interest rates this low. So it's interesting to see what sort of action is happening in Amazon, which again is the largest representation of retail business, at least in the US. So looking at the options and then going to trades, we can kind of see what action is going on here. So we'll sort it by quantity once this pulls up the trade list here. And the thing about Amazon is that because it is a high-priced stock, just at least in terms of absolute value, when you're spending almost $1,900 a share, the options are going to be a lot more expensive, which means that the volume is going to be lower. So when you look at something like Amazon, where we're used to seeing 10,000 blocks and 5,000 blocks, things like that, they're going to be a lot smaller out of necessity with Amazon. So if you're looking at, we're looking at these various trades, just go ahead and throw a zero on the end of that to get an idea of how it might compare to something else. So just looking at these, a lot of this is probably closing action. Today is expiration day. We have some early January, some February. But, looking at trades like this, though, you can see if it's something like this looks like a spread, a put spread, 1800 by 1780. Those are the strikes, right? So when you're looking at 280, it's more like 2800, right? Because the options are a lot more expensive. So this might be something that would be like $1, an 80-cent option and a dollar option if you're talking about $100 stock. So you could see that 280 options in Amazon is like quite a bit more in other stocks. So these are still pretty big trades. It's still block trades. Again, this would be almost like a 3,000 by 3,000 trade. And just looking at this one in particular, it looks like someone purchased the 1800 put, sold the 1780. That's your standard long put spread. Looks like they spent about $325 on it, so $325 per spread. And if it goes down to 1780, they can make $16.75. So this could be a bet, perhaps, that Amazon has peaked because of all the good retail news, and then next month it might sell off and go back down into the 1700s, or it could be a hedge. This could be a cheaper way to hedge a major sell-off by using a put spread instead of a put, which, as you can see, puts are very expensive. It'd be $1,100 or so to purchase a put. So using the put spread can lower that cost quite a bit. So this could be someone who is bullish on Amazon and buying the stocks, or buying some sort of bullish options and using this put spread separately as a hedge. So whether it's a hedge or a bet on a down move, it's even though Amazon is expensive as a stock, it's only $325 to do one of these put spreads if you are betting or protecting against the downside. So it's the sort of thing you can easily do in your account on your own without having to have the money to purchase Amazon as a stock or try to short sell it or something that would be really expensive. So just another way that options can be really powerful. And this is the sort of thing I do and teach in my services. And beginning service, as you can find the link on this page, is the Option Floor Trader Pro, which is only $49 a year. So if you're interested in learning more about this sort of thing, or doing some basic trades to get used to trading options, then that's a good place to start.